That is the way money moves today. It is the only way money moves today. Isn't it crypto? Isn't that like volatile? I can go to my bank and I can do exactly what I'm doing, but actually do it in stables. That makes my life so easy.
The market is about $316 billion. It's mostly covered by USDT and USDC. I mean, they're dominating that piece. If you were to give them one piece of advice, what would it be? And in one sentence?
I would say,
and today we're going to focus specifically on USD pegged stablecoins for bank grade cross-border flows. And we're going to be talking about how her company, Tesser, fits into that.
Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. You're building a fintech product. You want to offer digital assets, but wallets? That's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Dfns. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Dfns. MoonPay scales wallets securely with Dfns. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Dfns to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Dfns wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Dfns, secure wallets built right.
Good morning. Welcome to Web3 with FTC. We're here at the show floor at Money 2020 inside of the Money Pod in Las Vegas, Nevada. I'm your host, Ted Huff, the founder of Fintech Confidential and CEO of fintech advisory firm Voalyre. Cross-border payments, they're still tying up cash in pre-funds. And not only that, but they take days to post. But what's changing that is on-chain stablecoins. They settle fast. They give clear, queryable statuses. And today we're going to focus specifically on USD pegged stablecoins for bank-grade cross-border flows. And we're going to be talking about how her company, Tesser, fits into that. Geetha is the founder and CEO of Tesser, and it's designed to enable enterprises to send cross-border payments in hours instead of weeks or days. It really is built on the stablecoin infrastructure. She has an amazing background. She's a veteran from MoneyGram to Visa Direct and Circle, and she's taken all that experience and she's brought it and built out a blockchain-powered money movement for enterprises and financial institutions. Geetha, welcome to the Money Pod and Fintech Confidential.
thank you so much, Ted.
I want to kick this off because we're talking about how payments, they feel like they don't change that fast, but they actually kind of do.
Yeah.
Where we're looking at it, stablecoins have to be the way to make moving money simple, fast, and less expensive. But I want to ask you, what is driving everyone to decide that they want to try something new, get outside of their comfort zone?
Because there's real value. I'll start with that. So, to the point you're making, payments, they seem to move fast, but they're not. Part of it is a lot of the shifts are incremental. But now what we've seen in terms of blockchain and stablecoins is a big seismic shift. The answer to your question is there is a fundamental pain point to be solved for. When I started at MoneyGram doing cross-border payments, I was responsible for opening up the US to Philippines, US to Mexico, US to India corridors. And I remember 6 months negotiating with a bank in the Philippines so we could keep our money with them, but they would pay us no interest, and how often we'd need to refill the pre-fund, etc. And it was incredibly painful. That is the way money moves today. It is the only way money moves today. People keep money with other people and then hope that it moves from there. So stablecoins are a bearer instrument and they move online, on-chain instantly. So what's happening now is the value gets transferred. You owned the value, it's moved, now I own the value. Done.
What is the biggest single change that you see stablecoins bringing to that money movement infrastructure?
Think about it this way. If I had to do the US to Mexico, US to Philippines, whatever, I had to find a bank in every country. I had to take money out of my balance sheet. I had to go put that money there. And when that money runs out, I have to make sure I refill it in time. I'm not kidding you. Even today, some of the largest PSPs only find out they're out of pre-fund in the country when someone says, oh, my payments didn't happen. What happened? That actually happened to me, believe it or not. And so when it's stablecoin, you don't have to pre-fund. You've sent the money, they've received it, they can pay it out instantly. There's no balance sheet. Oh, I got to plan for so much that needs to be there. It's like, all right, I got to send $1 million. Here's $1 million USDC. Goes to the other side, 18 million pesos, you're done.
When we think about this, one of your core target markets is the enterprise level. Do these treasury managers and CFOs, do they have a good grasp on stablecoins, or are they still, as I call it, stable curious?
Yeah, I will tell you, it runs the gamut. In the large company, large enterprise, large bank, they're starting to dig into it. They're still a long way from really understanding, but it does run the gamut. There are early adopters who've jumped in, who have brought in the right people, but it goes all the way to the other end where people like, Geetha, I would like a stablecoin 101 first before we go any further. I'm like, I'm trying to sell you Tesser, man. And he's like, yeah, but explain what a stablecoin is to me first. So yeah, it does.
Just that comment right there and talking about them wanting a stablecoin 101. I would love for you if you could share that experience that you had with somebody who's like, yeah, I don't quite get the benefit, and what that light bulb moment was for them. They're like, oh, now I get it.
Yeah. Actually, I had a very recent conversation with a very large PSP who moves billions of dollars. And they were being a little short-sighted. They were like, oh, if I'm sending money to the Philippines instead of a correspondent bank, I now need some other off-ramp provider. What's the difference? I'm not really gaining anything. And then I was like, let's go together to your bank that you're using in the Philippines and tell them, forget the off-ramp provider. You receive the stablecoins, you can pay out in PHP instantly. And you don't need to hold an Ostro account and pre-fund and things like that. They're like, oh, I can go to my bank and I can do exactly what I'm doing, but actually do it in stables. That makes my life so easy. I don't need to find money to put in my PHP account anymore. It was definitely a light bulb moment. It took them some dot connecting, but they got there.
There's so much hype right now. I mean, Genius Act passed, and so now everybody seems to be talking about it. And I'm super happy for you because the investment that's going into this space is so crazy. Because of the hype, everybody's got an opinion. And a lot of times it's not based upon what's really working. It's just what they're trying to fundraise for.
Yeah.
So are stablecoins actually delivering on the speed, security, and savings? Kind of touched on it, but are they actually delivering on that whole value proposition?
Let me do that by giving you an example. There's a very large exchange in Mexico, very well known. They were an exchange. That's all they were doing. But 3 years ago, someone said, okay, let me try to use them to send remittance settlement funds into Mexico. And now they're processing 10 billion annually. They wouldn't just be processing 10 billion overnight if it weren't for the fact that there was actual value. So the companies that are using them to settle in Mexico are basically sending them USDC, and they are paying out in Mexican peso instantly. The speed value is there. The security value, I think, is something that, again, blockchain, transparency, there is definitely a question of whether, there is fiat leg on either side. Do you actually get transparency into the whole thing? No, that's going to come. That's going to evolve. But right now, the on-chain leg, you can see exactly what's happening, where the funds are, where it went, when it went, was there a problem with the network, all of that. So overall, I don't think there would have been the adoption that there is if it weren't for the fact that people are actually seeing value, right? When I was at Circle, Visa came to us to do settlements in USDC, and they have been continuously growing that. They have been adding stablecoins, they have been adding merchants, they have been paying out in stables. That has grown significantly. So again, wouldn't happen if there wasn't value. I think the impact speaks for itself.
It's so funny, the way that you're describing it, it takes me back to a conversation I had just yesterday at an event, and we got in the discussion of the stablecoin sandwich.
Yeah.
Which
famous, stablecoin sandwich.
It brings me back to like one of our advisory clients. And we originally started having the discussions about doing cross-border stablecoin movement, but they had a lot of pushback from the recipient and the country of origin of the products that are sold from. And those companies there weren't willing to entertain even the delivery mechanism being in stables. They wanted everything to follow the traditional SWIFT route, correspondent banks, and they were okay with a 4 to 7 day delay just in case, because like when you move money, the correspondent bank may run it through a fraud review. And although it's supposed to be next day, it can turn 4, 5, 6, 7 days after that point. How would you communicate to this, pretend my client's sitting right here, what would you say to them to help them understand how they could speed up and make their business more efficient doing that?
We worked with a very large remitter when I was at Circle. The remitter was looking at what options they had to make their overall settlement process more efficient. So this remitter works with agents in every country. So there are actually people in the country that do the payout on their behalf. But then they actually don't receive the funds from the remitter till well after they've paid it out. So over the weekend, they don't get anything at all from the remitter. They don't get it till the Monday morning. They have a line of credit that's extended to them by a bank that they're paying for that they actually use to make the payout. So first they were like, I don't know what the stablecoin thing is, man. I don't want to touch it. Get me fiat. This is weird stuff. And then when we went through the flows and explained to them, you can get paid immediately after the transaction, or you can get paid once a day, even over the weekend. And they were like, over the weekend? How does that work? And then we kind of walked them through it and they're like, oh, that means I don't have to pay the 11% I pay every day to my bank for that line of credit. And we're like, yes, that's what we're trying to tell you. They're like, okay, I think I'll try this thing. So you literally walk them through the reality of what the advantages are and they get it.
I want to look at it as like, from your perspective, what kinds of enterprises are experimenting or have started to move some of that over and doing their A/B tests across the board? What do you see those enterprises? What's keeping the ones that have decided to do that? What's keeping them from giving stablecoins a shot?
I'd say a few things, right? Some of them are still vague about the regulations. And depending on which jurisdiction they're in, again, we're a global company, so I talk to people everywhere. Depending on which jurisdiction they're in, the regulations may or may not be clear. In most cases, the regulation is just, there's nothing there. It doesn't say do it. It doesn't say don't do it. So people are a little bit afraid. But in many cases, the regulation exists. They just haven't put the time into figuring out, oh, okay, this is how I do it. Because, everyone's got a business to run and this is like a new thing that they have to figure out. So that's one. You said not to touch on the trust and volatility thing, so I will leave that there. The other thing is, people are very short-sighted about how they think about stablecoins. Mm-hmm. So I work with primarily banks and PSPs and MSBs, so anybody who moves money on behalf of others. And when you talk to PSPs, they are like, similar to what I mentioned before. They're like, well, I'm using another person on the other end anyway to do a fiat payout. And the cost of this versus the cost of that, I don't see the difference. And you have to sit down with them and walk them through a very short kind of view versus a broader view of how this will make their overall business incredibly efficient. And also, there are going to be other people who adopt it sooner that are going to be cheaper, faster, and these guys are going to get left behind. You have to kind of make them think beyond the, show me the value now in this particular thing that I'm looking at.
What is like one of the best, I'll call it experiments or proof of concepts that an organization should be looking at just to see how it could fit into their funds flow, into their money flow, into their infrastructure? What's like the first place you would suggest they start?
I will say that the clear product market fit today is in cross-border payments. So if you're in cross-border payments, like don't look at, I'm going to replace FedNow with stablecoins. You're not going to get anything there. But if you're involved in cross-border payments, pick a corridor. Pick one that is difficult. I've had a lot of companies come to me to talk about like flows that you don't think of. We always think of like US outbound and Europe outbound, but actually reverse flows, right? There's like a lot of funds coming into the US in US dollars. Pick a corridor that is difficult for you today. Just pick one, right? And try and figure out how to make that more efficient with stablecoins. It's really not that hard to do a POC with one corridor.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
That's a good approach. I mean, that's a similar approach that I take with a lot of other payment methods, payment rails, even expansion, like a company that wants to expand outside of the US. We take a very similar approach to that. And even entities that are outside the US trying to come into the US, we try and help them stay focused on one place to prove that market fit.
Yeah.
We're just about to head into the lightning round. But for those of you who are sitting here and listening to us today, if you haven't already, go ahead and head over to fintechconfidential.com and go ahead and sign up so you can find out about everything, or head over to Spotify, YouTube, Apple Podcasts. Go ahead and subscribe there and you can find out all the other fun stuff. But Geetha, going into this lightning round, real quick questions, real quick answers. Let's keep it as fast as we can, right? My first question for you is, what is the number one thing people get wrong about stablecoins?
I mean, you said it yourself. There's this whole question of, isn't it crypto? Isn't that volatile? I heard there was a DPEG for USDC. There is still a lot of uncertainty. These are the people who need the stablecoin 101. But yes, I think there is definitely that.
Do you think that what happened with Paxos and PyUSD here just a couple weeks ago, has that caused any damage, or is it kind of like a blip on the radar?
I tend to believe it's a blip on the radar. It didn't actually impact anybody negatively. It was just interesting news. I don't know how it happened. That's a whole other question. But I don't think there was a significant impact because of that.
It may or may not have involved some vibe coding, but we'll leave that for another discussion for another day. The next question is, Genius Act became law in July this year. Which provision do you feel reduces the most risk for on-chain stable value this year? And what's the first step that a financial institution, a PSP, or an enterprise should do to align with it?
So Genius Act, just to clarify, focuses on stablecoin issuance. So it basically puts very clear framework around who is allowed to issue a stablecoin. Along with that, what are the requirements in order to be able to issue the stablecoin that you have to comply with on a regular basis? So given that, the two things I think that are most important are, one, they have identified the kind of enterprise that can actually issue stablecoins, and there's a very clear framework around that. So it is, I think, called PPIS, PPSI, something like that. But it's basically, these are the requirements for somebody who can issue a stablecoin. So you can be comfortable knowing that the Fed has approved this particular kind of entity. Second thing is very clear on one-to-one backing. So where do you actually hold your reserves, how you hold your reserves, all that is very clear. So again, you have to be okayed by the Fed, and the Fed on a regular basis is tracking where you're holding your reserves, are you transparent, etc. They've done a very good job of actually making it much more transparent, secure, and safe for people to be able to adopt.
So we're going to switch over to Swift. They made an announcement recently that they're building their own blockchain-based platform. It's a shared ledger with over 30 banks. How do you see that shifting the roles between your bank-led rails versus your open stable coins going into, heck, let's just say next year? How does that change everything?
I'm going to give you the honest answer, but I hope the banks are not listening. These are some of the largest banks in the world. Swift came up with this incredible innovation called Swift GPI, like I think 8 years ago. It's been a while. less than 20% of banks today actually still actively use Swift GPI. It's incredible, actually. It's a very cool addition to Swift. 30 big banks getting together with Swift, making the announcement. I think we have a long way to go before we see any real impact of that. I think it's more a pledge to do something. And 2026, I will lay my, thing to say, no impact. 2035, okay, maybe something. But between now and then, how the industry will evolve is wide open. There's just so many things that are happening.
So we've seen Visa and MasterCard. I mean, you've had experience with Visa directly. They've all expanded into stablecoin settlement, and they keep adding more and more and more options around that. They've added EURC, they've added PyUSD. What impacts does that have to the value chain? Meaning the merchant, the acquirer, and the card brand. What impacts does that have for them by doing so?
And I have to give kudos to Visa for figuring this out a while ago, that there is real positive impact, that there's real value there. If you think about it, today, merchant settlement happens during the week, during market hours. So when people buy things and they pay for them, the merchant actually doesn't get paid till 2 days after. And
sometimes
4 days
four.
after. Exactly, 4 days after. It can be 4 days after. Suddenly, merchants are able to receive the funds instantly because they're receiving it in stablecoins, right? That's what Visa is doing. Now, obviously, Visa works with the issuer and the acquirer. They don't work directly with the merchant. So the acquirer has to enable the service. So now suddenly there are acquirers who have enabled the service and there are acquirers who have not. Guess who's going to be the one that merchants start moving towards, because they can hold their working capital instantly. Over the weekend, they can actually put their money to work. This is just the beginning, what Visa's done. I don't know the numbers now, but again, I worked with Visa when I was at Circle and brought them into the network. And I know they've grown significantly because there is clear demand for merchants wanting to use the service.
Speaking of the stablecoin market and growth, the market is about $316 billion. And it's mostly covered by USDT and USDC. I mean, they're dominating that piece. But give your rule of thumb for picking a coin per corridor and when you should specialize in something like PyUSD.
When you say per corridor, you basically mean they're all issued in different places. So you're saying, okay, because of that, like how do you basically pick? The whole point of a US dollar backed stablecoin is it's US dollar backed. And so wherever it is, that doesn't matter. That's not the thing you make your decision based on. You make your decision based on the strength of the coin. Yes, I'm ex-Circle, but I objectively will say USDC is where you start. And the reason for that is USDC and PyUSD are both like well within the regulatory framework, reliable, transparent. They're very safe stable coins to use. The truth of the matter is, depending on the use case, you send USDC over to another part of the world, they need to be able to take that USDC and get their local fiat out of it. You send PYUSD, it's a lot harder. You send USDC, the liquidity is pretty much everywhere. So you're able to get local fiat out of it. So I would put those considerations. And also because access to USDC is easier, it costs less to switch from USDC to local fiat than it does from many other coins. USDT is even cheaper.
You bring up the USDT because they by far have the largest market share of everybody.
Yeah.
But now they've decided to add another coin, USAT.
Yeah.
But USAT and you have USDT, these two here. I'm wondering what kind of interoperability that Tether is going to bring to that.
I don't have a crystal ball for Tether. I think they will make it interoperable. Tether's been very smart about how they go to market and how they push their global presence, right? So that they're accessible everywhere. They're doing USAT because they want to be a regulated stablecoin in the US, but at the same time, they don't want to give up the dominance they have with USDT. So they're going to try and make it fully interoperable. It will be interesting to see where this goes.
Well, we've come to my favorite part of every episode. And yes, I did bring my fun crystal ball with me. So I want you to look deep into the crystal ball and tell me, what do you see in stable coins in the next 3 to 5 years? And I know that's like a millennia in this space, but what do you see happening in the next 3 to 5 years?
Look, we've been through a few kind of up and down cycles with stablecoins. I think this time it sticks. I think this is going to be the beginning of stablecoins truly being adopted as a payment method, as a money movement method. There are other things as well, because I think stablecoins will play a big role in capital markets in terms of settlement and money movement there. But I think in terms of payments, this is the beginning. And I think over the next 3 to 5 years, you're going to see a few things. One, stablecoins taking an important part of money movement. Two, which stablecoin? And that is an interesting question, right? Because I think that will depend on the use case. I think there are, Amazon and Walmart and all these people have actually talked about potentially doing their own stablecoin, which they might do and be successful, but likely within their own ecosystem. Again, the first mover advantage that Tether and Circle have had with USDT, USDC, that is significant, right? The 316 billion, the majority is them. And so there are people with access to it, goes back to liquidity, goes back to access to shift from stablecoin to local fiat. I think they will continue to dominate.
It's interesting you mentioned, as I look at it, and I think back in September, USDC and USDT together lost about 13% of market share to other upstart stables, whether that be the MetaMask stablecoin, or whether that be USC. I mean, there's so many now. We started keeping track of it. We're well over 100 stables just available in the US.
Yeah.
It's really interesting as you start to think about that. And I question, will that market dominance maintain, or will it become more segmented into the specific use cases like you were talking about with the Amazons, with the Walmarts, especially these folks that have their own ecosystem that they built out? As the market grows, how much of the traditional open stablecoins are going to continue to grow with it?
I think you already answered the question, because it is going to depend on the use cases. And if you're looking for a publicly available stablecoin use case, which generally is, paying other people for goods and services, remittances, all over the world, you need a publicly available stablecoin. And I don't think the dominance of the existing stablecoins will go away. What you're seeing in terms of a little bit of the flight does have to do with different use cases, because people are in the tradition. Stablecoin started with the fundamental use case of people holding stables as a way to get in and out of other crypto when they were trading, right? So now they have little ecosystems where they get in and out of other crypto using other stables. But at the end of the day, as you start seeing stablecoins becoming a core way in which people move money cross-border for actually receiving value, and it's not just like a crypto trading mechanism, I think you will continue to see the dominance of stablecoins that have developed a sense of trust, have developed access to local liquidity. All of those things may come up.
Well, Geetha, with you being a fintech founder, and a lot of our audience are founders of fintechs or aspiring founders and executives, if you were to give them one piece of advice, what would it be, and in one sentence?
You didn't warn me about this question.
Of course not.
I would say, from my experience, you will get a lot of, I don't know if that's going to work. There are 5 other people doing this. Don't do this. Don't do that. I would say, do it. It's such an open space. It's blue sky, green field, huge opportunity. There is the 200 trillion worth of money movement that you can go after. You will find your place in it. Just go after it.
Fantastic. Well, Geetha, I really appreciate you taking the time to sit down with me. This is something I've wanted to do for a long time, and this just worked out perfect. So thanks for joining me here in the Money Pod at Money 2020.
No, thank you so much, Ted. Really appreciate the opportunity, and always real fun to do this with you.
So for those of you that are still hanging on, there are 3 things that I want you to make sure that you take away with you. One is that instant settlement on stablecoin value really cuts pre-funds and fees and opens up working capital in near real time. 2, the controls, the compliance, the clear procedures really have made stablecoins as a money movement more efficient, more traceable, more trackable, and dare I say more compliant than a lot of the existing rails that exist today. And as Geetha mentioned, if you're trying to figure out where you're going to use this, just pick one corridor, pick one place, pick one thing, work with it, and then just go from there. I'm pretty sure Geetha would agree with me. You're going to find a way that this is going to help you free up capital to do so much more than you've already ever done. And folks, this show is really built to give you insight from operators and not just headlines and not just all the little different pieces. Yes, we talked about a little bit today, but we want to talk to real teams. We want to talk about how founders are building really good products and how they're doing it and the problems they're solving in the marketplace. So if any of this discussion has helped you in any way and you've got any value from it, go ahead, head over, subscribe at fintechconfidential.com, Spotify, YouTube, Apple Podcasts, wherever you listen to podcasts, go ahead and subscribe over there. And you're going to be able to get deeper dive updates and other information at fintechconfidential.com. We've got lots of content out there for you to deep dive into. If there's someone that's interested in this, be sure to share it with them. Don't keep it all to yourself. This is a great topic to be sharing. I want to thank you all for joining. Geetha, thank you again for joining me today.
Thank you for having me.
And as always, just keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.